Traders, welcome back to my channel. In this video, we're going to talk about price action trading, more specifically, price action trading in trading ranges, because that was the structure we got to trade today. And when it comes to trading trading ranges, your first task is to identify important key levels, because every trading range is always bounded by two extremes, and these extremes may come into play later on, and they serve as a target for prices to reach. So I already found my key levels, the support right here, the resistance up here, and this is nicely indicating to me that these are the extremes and I expect to get reactions later on at these extremes. Now in the meantime, I need to follow the trend line rule in trading ranges, because trading in the middle of trading ranges can be quite tricky. I specifically want to trade at these extremes, buy low, sell high, but if the trading range is big on its own, I can take trades in the middle of trading ranges, but I need to identify a solid trend. I don't want to be guessing. So since we're coming from the bottom, we're pushing above EMA, I need to identify a pattern. So we have an uptrend working higher, there is a break, a new extreme. But more importantly, notice what we have. We have a first leg up, pull back, second leg up. So this is indicating to me the uptrend played out with the break and new high. And in trading ranges, I want to stick to the shorter term tighter channels for the most part. The wider patterns may not be as reliable. So once I see break new high, two legs up, this is information that I can expect a potential reversal. However, if I want to see reversal, I want to see prices pushing below EMA, but it's not happening. And we're not pushing lower. And you can see prices, instead of reversing or pushing higher, we're going sideways. So at this point on, there is no setup right here. This is basically indecision. This is just a consolidation. Uptrend played out, so you can go long, but you can't really go short just yet because there is no clear sign that the prices are reversing. So flat EMA, no setup right here. Prices broke lower and pushed above. And there pretty much nothing is much happening here, nothing clear, just a lot of up and down, up and down. You're exactly in the middle trading range, so really no clear high probability setup. This is where I pretty much have to sit on my hands until I get a proven clean trend so I can recognize it and take advantage of it. So we are pushing to the upside, and this is finally looking like a decent channel that prices are fitting nicely in, and that's always your goal, especially in these trading ranges. You want to see prices fitting neatly inside of these channels, so you don't have to second guess yourself whether the pattern is right or wrong. So once prices are working to the upside, I was expecting to get a second entry long to like a pullback at the key entry point. Why? Because I want to see a new high for this uptrend. However, that didn't even form, not remotely, because prices completely disregarded the exponential moving average. And now if I take a look back, I can see that we bounce off the resistance, which can generate strong momentum. So it makes sense that prices are pushing lower. However, there's a big chance that this channel is going to get new high. So I'm expecting second entry long. I don't even get it. Okay, so I adapt and I need to redraw new downtrend. So I expect to get second entry short after a break to a new low, and I only get first entry short because this is the new low. I get a break of the channel, I have first entry short, and new low was already formed right here. So the downtrend already played out without a chance for me to enter. And from that point on, I see strong push above EMA, strong push below, strong push above, and this is starting to get really confusing. So you can see so far there is no clean high probability setup for me to take. It is pretty difficult to read the structure inside of this mess. But sometimes that happens, and if the structure is not easy to read, you're sitting patiently until you're confident in your read of the structure. You don't want to be guessing. That a lot of times happen in trading ranges. Traders just feel the need to take a trade and they start guessing. We're not really truly sure about the structure. So we can see that EMA is starting to flatten a lot, and we have a move up, move down, move up, move down. So this is starting to look like a brand new small trading range inside of the bigger one. So the goal is always to locate the extremes, and we can see multiple confirmations at the bottom, multiple confirmations at the top. Notice we have uptrend working higher, break, attempt to create new high, but you don't want to sell because this is too congested, too stacked. You don't have a new high. Prices are pushing lower, break, attempt to create new low. You're getting the information this is a trading range. So you may start looking for buying low here or selling high, but you really want to make sure what you're doing, and you really want to follow the trend line rule. Notice we have a short-term uptrend working higher, break of the short-term uptrend, new extreme, indicating that the uptrend played out. I have a first leg up, pull back, second leg up, because market likes to move in pairs of twos. And if I see clean two leg pullback, that's giving me a confidence that the uptrend truly played out. And if the uptrend played out, that means buyers are not going to be overwhelming and are going to be strong. And if I'm at the top of the trading range and buyers are not strong, that means that the sellers are going to gain an edge. And this is a second entry short, new low right here. First entry short, pullback, second entry short. Now, it's a little bit more advanced, a little bit more aggressive because the signal bar is an inside bar. Had it ticked higher, reverse down as a reversal bar, would have been much better, but this is an inside bar with a little bit of a stem at the bottom, so a little bit more aggressive, but it's a second entry short, first decent setup for today. Other than that, you only have first entry long here and prices are breaking to the downside. You have a first break of the channel, which I would expect for prices to offer me a second entry short at the EMA, but it never happened. I just have a first entry short and prices keep pushing to the downside. And notice, this is the bottom of the trading range, and in trading ranges, most breakouts will fail. And you can see that the prices are strongly pushing to the downside. However, I don't feel you want to pick a bottom just yet because this was quite a strong move down and you never know how many pushes lower you're going to make. So it is always better to wait for prices to push above EMA and offer a reversal pattern because you're coming from the failed breakout below the trading range and it's high likelihood that the prices will pull back into trading range. Notice you have a push above confirming the bullish momentum. We have high low, we have a failed second entry short here, but it formed quite high. It's not touching fully the exponential moving average. It feels like it's hanging in the middle of nowhere. Don't really feel this is a good setup just yet. Had it closed strongly at the EMA or not so high would have been much better, but you can see the basis how price action works. The downtrend played out, strong pushback above trading range, above the EMA, indicating strong bullish momentum, such a big bullish push up. Now after that, you have a break new high, but you have another break, another new high, and another break, another new high, which is telling you something is different here. You have so many new extremes, which is indicating that there is possibly a different, stronger, slightly bigger pattern. So first I was watching pattern like this, but you keep getting so many new extremes. Notice another new extreme, another new extreme. When you see so many early breaks and you can't really put the finger on which way the pattern is correct, that a lot of times means there is spike and channel pattern. And you can see if I'm just going to use these lows right here, it's getting confirmed here. I'm just going to copy it, put it at the top, and basically EMA is pulling up and it looks like a spike and channel pattern. We're coming from the bottom of the trading range, so you expect, according to rules, for prices to reach the resistance. EMA keeps rejecting prices every single time, and right now we have a trading range rule that tells us we're going to reach the resistance, and at the same time we follow the trend line rule, which says that this uptrend is in play. Now we have a two-legged pullback, but it's not fully at the exponential moving average, and the signal bar is horrible, bearish bar. You cannot buy above bearish bar. Now you have a new high, first entry long, second entry long, which means we can reset the count here, and we have new high, first entry long, pullback, second entry long. Okay, and also it looks visually like a first leg down, pullback, second leg down. So it's a visual two-legged pullback and a new high, first entry long, pullback, second entry long. At the EMA, the small little support is holding here. It's almost a little like a failed breakout, tiny, decent small bullish bar to take a risk. And this uptrend just had a break, and you expect for this uptrend to create new extreme. So two-legged pullback is going to be a high probability setup if it forms at the key entry point and you're at the EMA, the smaller support is holding, decent enough bar, new high, first entry long, pullback, second entry long. So the trend range rule, the trend line rule, market created break, move to a new extreme. You have push lower, but notice EMA keeps holding. Now when I'm watching a structure like this, a lot of times in trading ranges, when you see prices going from the very failed breakout all the way up here without a single push below EMA, observe how the EMA is reacting. So many rejections and not a single close below. So this is a lot of times going to indicate that there's possibly a wider pattern, because you don't want to be going short too early once you see strong rejection of the EMA like that. So when I was watching this, I identify a pattern. I had something like this. Yeah, this was the pattern I was looking for. So even though we're bouncing off the resistance, that doesn't mean that we can start looking for shorts, because this pattern is right now valid, confirmed by the reaction of the exponential moving average. And notice you have a new high, first entry long, pullback, second entry long, but bearish bar below EMA, you can't go long. You can't go short here, not only because the channel is in play, EMA kept projecting so many times, but also you can see that this is a clear first leg down, pullback, second leg down. And you want to take preferably failed second entry when it's part of one move like this, but this is two separate legs down, so which means that it is now time for continuation of the main bullish trend. So if anything, I'm expecting to get a push above EMA and higher low, but I don't ever get a higher low confirmation of the two-legged pullback, so we can only sit here and watch the market push higher without any opportunity to enter. But market created a break, push to a new extreme, correction, second push to a new extreme. I cannot fade the breakout just yet. Why? Because when the trend is so strong on its own, you never know how many pushes higher you're going to make, so I cannot pick a top. Once I see, however, the prices are breaking above the resistance, and notice, this is where you can see these key levels consistently coming into play in trading ranges. Right now, you broke above the trading range, you have a break and a new high of the channel, so trend line rule tells you it's time for reversal. Trading range rule tells you it's time for reversal. So what you're expecting push below EMA and a failed second entry long reversal pattern. We have a new high, this is where we set the count. First entry long, pullback, second entry long, all the way down here, miles away from EMA. It really was supposed to form closer to EMA. This is too far down. You can see what would have happened. You can see that we have a break. We already have a break new low here. Another break, another new low, another break, another new low, another new low. So this is telling you that the shortened pattern is not the only pattern here, because you keep making so many tiny legs to a new low, and you can see that there's a smaller spike and a channel working. Prices are fitting nicely. Had a break, new extreme. Notice how you're not suddenly pushing to the downside strongly. You're starting to create every single push to the downside smaller and smaller, and you're starting to go more and more sideways. Downtrend is losing steam. There's a new extreme. Push above EMA, first entry short, pullback, second entry short, failure, above exponential moving average, downtrend played out. This is a reversal pattern, and I took this trade myself. All right, traders, I'm resuming the video as I'm going to take a failed second entry short. Let's see if we can get filled here. All right, we got filled, so I'm going to go for a tick target profit. We have a new low formed, first entry short, pullback, second entry short, failure. The spike and a channel had a break, new extreme, multiple bounces. We had push above EMA and we got out. So I'm going to tighten the stop loss to break even, because anything right now that happens is just a bonus. My main portion, the scalp portion, was already reached. So the runner is just in case market does something unexpected. But we had a failed second entry short, and you can see our runner just got hit instantly. Uptrend played out with a break new high, push below EMA, push above, push below. And this is where it got really confusing, especially in a trading range like this. Sometimes traders think that they're not reading the price action correctly and they get discouraged. Once I see push down, push up, push down, it's not clear. It's very hard to find a proper setup. It's very hard to put the finger on what the proper bias is. So it is completely okay to just sit here and wait for prices to show your hand and show the bigger bias. This is pushing lower, and I expect to take a first entry short, second entry short, failure, but this is a horrible signal bar, body far away from EMA and a bearish body, so I cannot go long here. I wanted to take this high low. At that point, it is too stacked, break new high. It's chopping all over the place, but important thing is to pay attention to what's going on, because if I'm going to zoom out, I see that we have somewhat of a bullish imbalance, because the middle of the trend range keeps holding and the bottom of the trend range is completely empty. So this is telling me that there's a bullish bias, the downtrend played out, and notice there's being a support forming. I was looking at this as a trend range structure. I want to go long, downtrend working lower, break new low. I see first leg down, pullback, second leg down. I see two-legged pullback. Since the downtrend played out and created new low, indicated to me that downtrend is over, and this is new high, first entry long, pullback, second entry long. At the bottom of the trend range, flat EMA, and this was my second trade for today. All right, traders, I'm about to take a second entry long off the bottom of the trading range, going for a tick target profit. I see new high, first entry long, pullback, second entry long. At the bottom of this trading range, downtrend played out with the break and new low. I have two legs down, indicating to me that the sellers are over. I have new high, first entry long, pullback, second entry long. We can see sideways EMA, we're going flat. The bottom of this trading range is still holding. Let's see if we can get the scalp. We're a small little bar, so we're risking very little on this entry right here. Could have even sneaked in with the limit order to get much better entry, but I'm still Fairly confident we're going to push higher. Let's see if we can get filled. Looks like we may get trapped. We were a couple ticks away from getting trapped here. I'm still going to hold this. New high, first entry long, second entry long, trading range structure, sideways movement. Come on, high low could push things higher now strongly. We're still inside this trade. We still haven't scalped out yet. Come on. And we got filled. So I'm going to tighten my stop loss. You guys can see 2 ticks away from getting stopped out, but I'm keeping my stop loss at safe place. And we can actually manage to catch a decent runner here, hopefully. All right, traders, I'm going to tighten the runner really tight. I don't want to be too greedy. We got around 10 points. All right, traders, so our runner just got hit. These are our 2 trades for the day, so we got a decent runner. I'm not going to take any more setups. We pretty much didn't get that many setups early on, so I was waiting, sitting on my hands for the most part. And then we managed to get a failed second entry short and a second entry long at the bottom of the trading range. Uptrend has a break, new extreme. So we have a break in new high and we're bouncing off the resistance. So we have new high, first entry long, second entry long. This right here was very, very tempting. But since uptrend has a break in new high, you have to be a little bit careful. You will want to see preferably high low confirming the second entry long. It looks like a nice 2 legs down, but with the break in new high, you got to be a little bit careful here. The resistance is holding once again. This is still the same resistance you identify during the beginning of your trading session, and you can see it's coming into play 4 or 5 hours later. So this is important here. Uptrend played out. I see a sideways structure and last attempt by the bulls and a strong push below EMA. So that means I'm expecting for prices to reach from the resistance all the way down to support following the trading range rule. So I'm going to locate a channel. We have new high, first entry long. I don't think it is safe to take lower high just yet. It formed horribly. Regardless, no clean setup, but I really want to see the confirmation here. And we have a failed second entry long here, but notice the signal bar is bullish and this bar is quite big. Decent setup. You expect to get a failed second entry long, new high, first entry long, second entry long failure. Notice it's just a small trading range at the top of the bigger one. So you're playing the same way, you look for reversal pattern, didn't really set up probably. You know what, I will mark it slightly more aggressive. Your stop loss has to go above this bar right here. Context wise, this is why I'm marking it. Context wise is a great failed second entry long. Now you can see break, new low, another break, another new low. You can see how prices are failing to push above EMA. So that means you can extend safely the channel and you have massive push to the downside. Now you can either play the bigger channel or channel like this with overshoot. An overshoot will lead to a break of a channel or possible reversal, but notice you have an uptrend walking higher break, attempt to create new high. You broke the channel, you close outside, so that's good because now the overshoot came into play, but EMA is holding so nicely and this is such a big bearish bar and the downtrend is new low because it's the first break of the downtrend and you expect new extreme. You know, this is a good second entry short even if you're playing the overshoot. It can be just slightly stronger downtrend. You focus on it like this, but since it closed so nicely, there's a clear break, move to new high, almost reached. EMA kept holding such a strong reversal bar. You have to take a second entry short like this to create new extreme because you're following the trend line rule. Now prices didn't reach new low just yet. Notice this low is still lower than this. So you have first entry short, second entry short again, and this would have been a beautiful setup, but the signal bar is so bad. We cannot sell below bar like this, which has a big bullish stim. So this is a second entry short at the EMA. You expect still new low, but the signal bar is horrible. Had the signal bar been better, this would have been a great 2-leg pullback, second entry short, high probability setup. New low was formed, couple more legs to new extreme. And then I want to talk about this setup right here because trader took it. We have a break, new low, indicating the downtrend played out. We have a push above EMA and we have a failed second entry short reversal pattern. Off the trend line, it is not closely touching the exponential moving average, but it is close enough, decent bullish bar. This setup is not wrong, that's why I'm marking it. This would have been losing trade because your idea is correct. You have a break, couple legs to a new low, push above EMA, and you have a failed second entry short. Okay, but notice the same issue you have here that can sometimes happen in trading ranges. Once you're coming from the very highs all the way down here, every single time prices are trying to push above EMA, they failed. Rejection here, rejection here, rejection here, rejection here, rejection here. So you see prices staying below EMA for such a long time. There is a high likelihood that prices may not reverse so quickly, but since it is of 2 key entry points and it looks fairly nice, and this is a decent high probability setup, and this would be just a normal losing trade that every strategy has. So definitely a decent trade to take a chance on. Notice it just stalled a little bit and it created new high, first entry long, second entry long. So once you see now a second entry long and EMA keeps holding, and first break of this channel, so you expect new extreme following the trendline rule, this is where you can re-enter on a second entry long, and EMA keeps holding. Market created new high, congestion at the top, and then we didn't have much of a good high probability setups after that. We have a second entry short, but that's not really looking too good. You already have a break, new low, you're going sideways, you have a second entry short here, but look at the single bar. This would have been a double bar entry, no clean setup. After you push strongly here, that's when you can identify the wider downtrend. But you know, you can see market closed with a structure like this. Good luck and safe trading.